Good afternoon. We're taking a look at the S&P, and currently pre-open we're at 32.44. So we're not that far away from where we closed. We are up. Obviously, currently we're 16 points higher. We closed yesterday at 32.25. Obviously, you can see the low down there at 32.14. Now we do have some support at 32.11. We've got this little bit over here. Okay, so 32.11 to 31.92 is support. Now, you can see the way the stochastics fell out of bed yesterday on that action. We don't want this in danger of being oversold. We got capped yesterday by the 55-day moving average. That came in at 32.62. Our high was 39.59. We've got the 23.6 resistance at 32.67. Me, personally, I think the stock market, the US stock market, is holding up quite well. So I will be tempted to be a buyer. Well, I'm not going to be tempted. I'm going to be a buyer of this market on any weakness down to that 32.14.11 area. Possibly may add to 31.95. And my stop will be below 31.88, which, as you can see, is the 32.8 fib. Where would I be looking to get out of them if I can get them where I want to? I'd be looking to get out of them any level up to that 32.67. You've got then this coming in this line, that's coming in at 32.81. Obviously, we've still got the gap, 33.28. Now, don't be misguided that this market cannot correct or retrace back to that gap. We've seen this a lot with the S&P and the Dow. We've seen it fall out of bed. We've also seen it within the next few days not only retrace all of its declines, but go further to make further all-time highs. So it can be done, and is done more often than not in this market. Now, bearing in mind, we've been in an uptrend since 2009. And although we've seen corrections and we've seen retracements, our primary and secondary trends have not changed in all that time. We've had blips, of course. We've had no more than 2018 we had blips, but there is underlying strength in this market. And if you buck the primary and the secondary trends, you could come a cropper, you could come unstuck. Where is the market going to be put under much more pressure? This will be if we break this 38.2. The reason being is since this point here, where the market's gone straight up, basically in a straight line, at this point here, markets can retrace 23.6 in a strong uptrend and 38.2 in still a very strong uptrend. If you break the 38.2 in a strong uptrend, you would be looking at then the 50%, but more to the 61.8%, which is obviously the golden ratio that we use, and that's down at 30.60. Our 200-day moving average comes at 30.43. So I'm cautiously a buyer on weakness unless we break below and hold below 31.88. So let's have a look at our Dow that was down over 1,000 points yesterday, and this one did go through the 38.2 from the same measurement as what I've just done on the S&P. You can see where I put this down. So our 38.2 short term on the Dow is 28.590. At the moment we're trading at 28.096. So this is where we could get back up to quite easily. We closed lower yesterday. We're 120 points higher, which, as we dumped 1,000 points yesterday, is by the by. But there still is this air of it's gone down and lost ground obviously yesterday, and it did break that 28,105, and currently pre-open we are still below that area, so we've got to keep our eyes on it. But again, I think if we can hold above here today, okay, and that's only 28,105, you've got more potential for this market turning round and going back up to fill the gap, and that gap on the low is 28, well, it's quite a way up actually, 28,892. So bear that in mind, and that ties in up here with the 61.8 at 28,968. I don't see, at the moment, I wouldn't be buying up here. I would be covering my longs and I would be selling. Now, keep your eyes on the indicators. You can see that the RSI is at 25%. You can see that the stochastics, although oversold, the red line, I'll do it that way because there's no point talking about D lines and K lines, right? The red line is still above the blue line, which still points lower, and that's at 38%. Our blue line's at 20%, so I've got it at 10 when it becomes overdone. Watch it there. If it is just a correction, and it could be, we know what the S&P can do. If it is just a correction on the Dow and the S&P, these indicators will start to flatten out and they will turn positive, and we need to go sideways. We don't need to go lower to make these oversold. We can go sideways, and that will ease those indicators and allow the market to breathe and trade higher. Obviously, if we struggle at 28,105 today and we can't break and or maintain above it, we're looking at our next level of support. You've got it here coming in on the Dow at 27,909 down here. You've got it coming in here again, and that area is 27,745, 27,562, and you've got the 50% fib level coming in at 27,649. Okay, that's it from me. Good luck, and I will catch you this afternoon.